Welcome to this explainer. Look, if you're gearing up for your ACCA Performance Management exam, you are exactly where you need to be. Today, we're going to break down precisely what you need to know, and more importantly, how you actually apply it. We're getting right into some high-yield, exam-focused concepts.
Okay, let's just dive right in. Nailing these two concepts, cost behaviors and activity-based costing is, well, it's completely non-negotiable if you want to pass PM. The examiner absolutely loves testing these areas because, frankly, they're the bedrock of modern management accounting. Think about it. If you don't understand how your costs behave, you can't manage them, and you definitely can't pass this exam.
So, Section 1, Cost Classification Basics. Let's build that foundation.
Before we even think about allocating a single overhead or calculating any variances, we've got to answer this one fundamental question. How do your costs actually behave when your activity level changes? Like if you produce one more unit, or hey, 10,000 more units, what actually happens to the cash flying out the door?
Right, let's map out the 4 absolute rules of cost classification you've got to know. First up, fixed costs. These stay exactly the same in total, no matter what your activity level is. Think of factory rent. Whether you make 1 unit or a literal million, your landlord still wants the exact same check at the end of the month. Second, we've got variable costs. Now these are constant per unit. Direct materials are your classic example here. Every single new product needs the exact same amount of raw material. Okay, third is semi-variable costs. It's kind of like a hybrid. You've got a fixed base cost plus a variable element stacked on top. Imagine your factory electricity bill. You're paying a flat connection fee just to keep the lights on, plus a variable charge for every kilowatt hour those machines actually chew through. And finally, step costs. These are fixed, but only within specific bands of activity. A supervisor is a great example. Say one supervisor can oversee 50 workers. Well, the second you hire worker number 51, boom, you've got to hire a whole new supervisor and your fixed costs step right up to that new level.
Now lock this one-line summary into your brain right now. Cost behavior equals how cost reacts to activity change. Seriously, jot that down, highlight it, stick it on your fridge. This one single sentence is the ultimate building block for everything else we're covering in this explainer. It's the lens you absolutely must use for every scenario the examiner throws your way.
Moving on to Section 2, the limits of traditional costing. Let's look at where things get complicated.
See, the old way of doing things, traditional costing, is a trap just waiting to catch you out in the PM exam. It's a blunt instrument that relies on a single overhead absorption rate, or OAR. Now, back in the day, factories had massive direct labor forces and hardly any overheads, so absorbing those overheads based on a volume measure, like labor hours, made total sense. But today, in a modern manufacturing setup packed with automation, robotics, and huge pools of overhead, using a single volume-based OAR is pretty much guaranteed to give you the wrong product cost. It just lazily smears overheads evenly across everything based purely on volume. And the result? You end up severely overcosting your simple, high-volume products and dangerously undercosting those complex, low-volume products that are actually draining all your overhead resources.
Which brings us to Section 3, Activity-Based Costing, or ABC. This is where things get really precise. When traditional costing totally fails you, ABC swoops in to save the day. This setup brilliantly illustrates the difference. Traditional costing relies on that one generic rate based purely on volume. Like we said, it's kind of lazy accounting. But activity-based costing, it upgrades your entire system to use multiple, highly specific cost drivers based on actual activities. We are completely shifting gears from a generic volume perspective to a laser-focused, activity-driven one.
So the big takeaway here is that ABC tracks the actual activities driving your costs up. We're talking about things like setting up machines, ordering materials, or running quality inspections. It assigns overheads to your products based on how much of those specific activities each product actually eats up. This makes your final numbers incredibly accurate, which gives management the true data they need to set prices and make big strategic moves.
All right, let's get into Section 4, the 4 ABC steps. Time to see how this actually works.
You need to memorize this exact 4-step sequence to score full marks. Step 1, identify your activities and pull the overhead costs associated with them, like your setups or ordering costs. Step 2, calculate the cost per driver. You do this by simply dividing the total activity cost by the total quantity of the cost driver. Step 3, assign that calculated cost to your specific products based on how many drivers each product uses. And step 4, please do not forget this in the exam, stack on your direct costs.
Remember, ABC only deals with overheads. To get your total final product cost, you've absolutely got to add back your direct materials and direct labor.
Okay, let's actually run the numbers so you can see this in action. It's pretty straightforward. Imagine the examiner tells you machine setups cost £100,000 in total for the year. That right there is your total activity cost. They also mentioned there are 500 setups in total across all your products. That's your total driver quantity. So you just divide that 100,000 by 500, and boom, your cost per driver is exactly £200 per setup. That is the magic number you're going to use to assign your costs.
Let's take it one step further and see how it builds. We already know our rate is £200 per setup, right? Now, let's look at a specific product. If the exam scenario tells you product A requires 10 setups during the period, all you do is multiply those 10 setups by your driver rate of £200. 10 times 200 is exactly £2,000. Just like that, you've assigned £2,000 of highly precise overhead directly to product A. It makes sense, it's perfectly accurate, and most importantly, it's going to get you those marks.
Now listen up, because you're going to want to write this exam trick down immediately. The examiner doesn't just want to see if you can punch numbers into a calculator. They want to know if you actually understand when to use this method. ABC is only worth the massive headache and cost of implementing it when two specific conditions are met. First off, overheads have to be massive, like a huge chunk of your total costs. And second, product complexity has to be high, meaning your different products are consuming activities in wildly different ways. If you're just cranking out one simple product, or if your overheads are tiny, traditional costing is totally fine. But massive overheads and really complex consumption, that scenario is absolutely screaming for activity-based costing.
So, as we wrap up this explainer, I'll leave you with a provocative thought to chew on before exam day. Performance management is entirely about giving people accurate information to make big decisions. Precision is what wins you marks. So when you sit down in that exam hall, are you going to rely on the blunt instrument of traditional costing, or are you ready to confidently pick up the ABC scalpel? Master these steps, really grasp the logic behind the numbers, and you're going to absolutely crush this exam. Keep practicing those past papers, and I'll catch you next time.